Hi guys, welcome to Honeystocks.com weekend earnings watch analysis for the forthcoming week. Now, before I really get into this, most of you already know, please pause the video, just make sure you're comfortable with that before you proceed any further. One little ask, if you do enjoy this video, if you get some value from it, please feel free to subscribe to our channel, share it, like it, comment, let me know what stocks are on your radar. Would be delighted to see what you're all thinking. Now, obviously, this is an earnings type presentation. So what I want to do is really just highlight some of the stocks that I feel like should be on your radar for earnings this week. Now, first thing to say is I do not believe in taking new positions in the run up into earnings. I have a mega popular blog on this subject. I've recently just recorded a YouTube video. Feel free to check that out. It will be at the end of this video, so you can just click the link and go directly into that, just to see exactly how you can play earnings season with minimal risk, and it's mega profitable. A lot of my clients find massive success with it, so hopefully that helps you out as well. Now, obviously, it's a big week coming up. We've got the Fed talking, so we will obviously need to observe and just wait and see what happens there. But like I said, I've got a few charts that I feel like you should be considering for earnings. Maybe just watch out how they report, and naturally we can look to identify optimal entries on the back of that. So, well, first off, let me just quickly touch on Beyond Meat. Now, obviously, they report earnings on Monday. It's had an absolutely monster move in the last few weeks. I don't think anybody has expected it. Um, Obviously, if you're in Beyond Meat at the moment, be super careful. I think if they report negatively, I think you can say goodnight to a huge portion of that gain. So obviously, it's entirely up to yourself what you wish to do. Do you want to hold into earnings? But I think the last thing you want to be doing is gambling going into earnings. I think you can maybe look to take advantage of any potential weakness if it reports well. But I wouldn't be jumping in on the back of Beyond Meat. There's not much of an analysis to be done on Beyond Meat, to be perfectly honest with you. This is really just a note of caution for those of you out there. And like I said before, I think if you check out the video for earnings season that I've done recently, I think you'll understand what to look for. AMD reports this week. Obviously, it's had a good move this year. It looks like we're close to maybe breaking out. So again, there's a fair bit of upside potential on AMD. When you look back on the chart over the last few years and so forth, it has been a little bit higher in the past. So certainly with a breakout, it's not a bad thing. So absolutely, I think AMD should be on your radar. Apple recently has broken out. Obviously, it had a lot of weakness earlier on this year. But since then, it's obviously found its groove a little bit. It has recently broken out. There's a couple of key levels that we need to be aware of, but I think if we can get a move above the 210 level, it's logical that you've got $20 of upside. But again, it's going to come down to what happens at earnings season. So Apple is naturally on the radar, but I'll just wait and see what they say for earnings. Now, Grubhub's interesting. It's obviously negative performance this year. So normally this is a stock that wouldn't really be on my radar. A few weeks ago, I highlighted this as a potential breakout. Now, we got the breakout and it's moving along okay, not great, but okay. Now, it's obviously been moving sideways. I think what the attraction with Grubhub is, if we get any kind of really positive earnings announcement here and we get a move above this $80 level, you just need to look at the chart. There's a tremendous amount of upside potential with Grubhub. So again, although it's got negative performance this year, very much looking to take advantage if we get a breakout above this area, just purely from a risk to reward perspective. It's probably one that's not on your radar. I know many of you like to stick to the same old stock all the time, but certainly Grubhub's one to look at. Um, Eli Lilly, for those of you that are holding Lilly at the moment, obviously negative performance this year. It is in a bearish environment. It's in a bearish downtrend at the moment. I think we can see that from the chart. I think that the line in the sand is certainly below 105. I think if it reports negative earnings, you're probably looking at quite a lot of short interest coming in, and that's not a place that you want to be below this level. We can see in the past that historically it's a key level for the stock. So again, get your rules in place for earnings season, and protect that capital. Lam Research now. Lam Research, like the semiconductors, are obviously performing really well. Again, they report this week. Big performance this year. At the moment, I like the semiconductors. I've got a decent position in Nvidia at the moment. Lam Research, actual fact, a few weeks ago, I sold my position on this dip here, stopped out, which kind of annoys me a little bit because it's obviously gone on a huge move to the upside. But that's just the nature of the stock market. So I'm not going to hold it against Lam Research. But I think what you need to be looking at here for earnings is this level up here. Provided that we stay above, I think, $200, I think we've got to be bullish Lam Research. But again, I think it's worth just paying attention to earnings to see what they do there. Dexcom, obviously, again, it's kind of moved sideways. When we look back on the chart, I think it's fair to say that at one point in time it was trending very well. Over the last 12 months, not so much. I think it's really just been moving sideways, not really doing much. But recently we had a breakout here, and certainly, hugely profitable move. Again, resistance met, but we do seem to be moving into a favourable chart pattern here. But I do think that Dexcom this week, I think when they report, one of two things is going to happen. You're going to get a monster breakout, or you're going to get a breakdown. So absolutely keep an eye on earnings, wait and see which line it crosses, and do your own due diligence. Next up, we've got Shopify. Now, you don't need me to tell you, what this stock's done over the last 6 months. It's just been absolutely ridiculous. So yeah, again, one or two things is going to happen here. They're going to report good earnings, and it's going to start motoring towards 400. Or if we get a breakdown here, it's very much a case of assessing what the earnings say, and obviously reacting to what price says. But again, big week coming up for Shopify. Square Inc, again, taking a huge beat down last year. It's now starting to move. There's a very clear resistance and very logical resistance area here. So again, watching earnings closely. I think if we get the breakout positive earnings, I think it starts to move towards 100. Negative earnings, if there's poor news, poor guidance, etc., again, you might want to consider just reassessing the situation if we get a breakdown below this level. Etsy, now obviously Etsy, again, in the past performed really well. It's not really done much recently. It's in a bit of an uptrend. Yes, 49% outperformed the market this year. It looks like we're getting a breakout here. So whether this breakout is sustained and we start to motor towards 100 is going to be very much dependent upon earnings. So again, Etsy is one that I'm watching very, very closely. Pinterest. Pinterest is obviously moving at the moment. It's obviously, since its IPO, it's up a little bit. But we've had this breakout here. Now, one of my clients has got in on this breakout, and it's performing pretty well at the moment. But again, comes down to having a rule set in place, guys. Capital protection is always the number one priority. Good profits follow good capital protection. So, get your rules in place for Pinterest. I think with recent IPOs, it can get especially difficult come earnings season. If you believe in the company, if you're in it as a long-term investor, then, good on you. I'm very much, as you can see, a technical trader, chartist, whatever you want to call me. So I'm just observing the technicals, and we've got the breakout, but there's very much a note of caution with this one. Yeah, Universal Display Corp. Now, again, I've highlighted this so many times over the last few months, and again, it's obviously performing beautifully. We've got another breakout, so we are now trading all-time highs. So it's very much a case of just, again, observing earnings, seeing what happens. Sorry, excuse me. If we get positive earnings, it's going to start moving towards 250. But if we get a break back down here, we know with failed moves, we get, fast and aggressive moves in the opposite direction. Huge performer this year, but I think you've obviously got to be bullish above 210. Below it, you might want to just rethink your position. Yeti, again, it's threatening a breakout here. Very positive bar here on Friday. Again, they report consumer discretionary, massive outperformance this year. My guys have had an alert on this a few months ago, obviously performing really, really well. But yeah, again, I think you get a breakout above this $36, $37 level, and a sustained breakout, then that's going to start moving towards 50. I've got no doubt. So yeah, Yeti should absolutely be on your radar. Twilio, again, my guys got an alert on this, I think, way back at $100. It's obviously performed really well, like most of the tech companies, cloud tech, I should say. So again, we're close to breaking out above 150. I think positive earnings, it probably starts to motor. Negative earnings, I think you want to just rethink your position if you get a breakdown below this level. But yeah, I mean, I think Twilio's, very, very logical. But the other thing that you have to be very, very mindful of, guys, is sector rotation is very, very real. Cloud stocks are obviously the flavour of the month at the moment. There's going to be a day, which I would suggest is going to be pretty soon, where you're going to get a rotation out of cloud tech companies, and there's going to be a rotation into another area. So you really need to have an understanding of what's going on in the overall market in order to anticipate and identify the strength within the market. So that's really the charts that I wanted to discuss for earnings watch this week. And I think the other thing to say is, if you are somebody out there that's struggling and maybe you're thinking, what the hell is all this? I think the thing to say is, my name's Sam, and I'm currently studying towards my CMT designation, which is obviously, a huge deal. But I also run Honeystocks.com trading school. I've got a very logical approach to the markets. I don't like to overcomplicate things. And I have a bank of clients that are based all over the world. We're all part of a super successful trading group. And really, there's a very specific type of person that I can help. If you're somebody that's trying to grow a super small account, if you're someone that is day trading, I cannot help you. The people that I can generally help are those that have got a career in a business and they're trying to fit trading in around that. Maybe, if you do want to get away from day trading, I can certainly help you with that. If you want better consistency, if you want to actually learn and not just follow all the free content and follow all the analysis, trade ideas on the internet and hunt around for everything. If you want to trade and align yourself with a successful group, then I think I can probably help you in some way. And if you are somebody that struggles a little bit, just jump onto our website, honeystocks.com. click apply, let me know what you struggle with, and I'll have a conversation with you. I'm very, very relaxed, very chill. I've had at this point hundreds of conversations with traders that are struggling all over the world, and quite often I can help people on a phone call. I'm not going to try and throw anything down your throat or anything like that. So if you are somebody that struggles, if you do want to learn an approach, then jump onto our website and just schedule in with us. But yeah, if you've stuck around to the end, thanks for watching, and maybe I'll speak to you soon.